Hello and welcome to the day ahead. It is Monday, May 23rd. I'm Andrew Gagan. Well, another week, another edge lower for global markets. The MSCI World Stock Index down for a seventh consecutive week, its longest losing streak since the index was launched in 1990. Elsewhere, around Europe, stocks bucked the broader trend, ending in the black with sentiment bolstered by China's move to cut its prime rate for 5 years more than expected, as Beijing looks to cushion the impact of an economic slowdown. Eurozone bond yields also higher following that news. And on Wall Street, the S&P briefly dipped into bear market territory before recovering as investor unease continues over the path of policy of the Fed and recession fears. The broader index now sits 18.7% below its January 3rd record closing high. That whipsaw session capped another wild week for US stocks, ending down for a seventh straight week, its longest losing streak since the dotcom bubble was deflating in 2001. All three of the majors managed to claw back steep losses to end relatively flat on the day, though Tesla and other high-growth stocks weighed on the Nasdaq. Treasuries were lower for a third day as equities knocked on the bear market door and calls for a recession grew louder. The benchmark 10-year, the yield there hitting a fresh three-week low with the spread between the 2 and 10 narrowing to 20 basis points. Well, getting to the bigger picture, and in the latest Fed speak, voting member James Bullard reaffirmed expectations that the central bank will be hiking rates to above neutral, but added that the Fed could even be cutting rates in 2023 or 2024. Meanwhile, China's central bank, the PBOC, cut its 5-year loan prime rate by a larger than expected 15 basis points to 4.45% as it moves to support the country's property sector. And in Europe, German producer price inflation for April was stronger than expected at 2.8% for the month, taking it to a record annual pace of 33.5%. That is the highest since 1949. And in the UK, retail sales surprised to the upside in April. Eurozone consumer confidence fell for the month, as did UK consumer confidence, which is at a record low. And major currencies were mixed against the US dollar. The Aussie dollar falling from highs near 70.7 US cents to 70.5. And after sharp falls late Friday, the largest cryptocurrencies had managed to claw back some losses, with Bitcoin just sitting above $30,000, while Ethereum is around $2,000. A quick check on what we're watching in the week ahead globally. And all the action is happening stateside, with the Fed minutes the heavy hitter on Wednesday. Hawks are circling to see whether there is any guidance on future rate hikes before the next meeting on June 14th. And after the Fed, it's all about growth, with GDP for the March quarter released on Thursday. Forecasts are for a contraction of around 1.4%, following a solid 6.9% expansion in the December quarter. And wrapping things up on Friday with personal income and spending figures, including the PCE indicator, which is one of the Fed's preferred inflation measures. All right, so the local share market set to open the week lower as investors digest a change of government in Australia and ongoing weakness in global equity markets, with the SPI futures there currently off around 0.2%. And global oil prices rose on the prospect of a European Union ban on Russian oil imports, as well as the expected end to the lockdown in Shanghai. Brent crude up around 0.5% to $112 a barrel. Iron ore futures lifted 2.5% after those accommodative moves by China's central bank to support the property sector. Base metal prices were mixed, while the spot gold price rose marginally to end the week close to 2% higher. Now, 9 years in the making, Labor has returned to government as Anthony Albanese becomes the 31st Prime Minister of Australia, being sworn in today. 70% of the vote is counted, and it's looking more likely Labor will hold a majority government, currently holding around 72 seats, and the coalition at 51, while Independents and the Greens holding 14. Another 14 seats remain in doubt. Spending and the budget remain the focus for markets, with the ALP earmarking nearly $19 billion in new spending over the forward estimates, mainly on childcare, aged care and renewable energy. This ties in with a major focus of the campaign, climate change and ESG, with businesses continuing to face gradual tightening of allowed carbon emissions. And the fresh-faced Prime Minister is now headed to Japan for the Quad meeting tomorrow, including a bilateral meeting with US President Joe Biden. All right, let's take a look at the data, which will move the local dial and focus firmly fixed on Wednesday and Thursday. Construction work done, business investment and CapEx, key inputs for the first quarter GDP, followed by April retail trade data on Friday. And finally, across the ditch, the RBNZ is widely expected to hike interest rates another 50 basis points as inflation soars. And the market, though, is split on whether the Kiwi Central Bank will follow up in July with another 50 basis point move. And that is your day ahead. See you again tomorrow.